Hey, on the 17th of December, today is the day everybody's waiting for, the FOMC protocol and afterwards the press conference. As usual, our normal disclaimer and the CFTC rule applies, obviously. Now, let's look at the numbers for today to start off with. Basically, the important number everybody was looking on in wake of the FOMC protocol was the CPI, the Consumer Purchasing Index, which was expected around 1.4. Previous was 1.7, came in at 1.3. So not as good anymore for all those people who are expecting very strong information on inflation increase, etc. So at the end of the day, where does this leave us for tonight? Now, what we're going to do is we're going to look at each currency pair and have a look what's going to happen if the Fed's going to be more dovish or more hawkish. So what are the things we're going to look for tonight? For tonight, we're going to look for, first of all, whether the text itself of the protocol still includes the passage considerable time, because considerable time basically means in the contents of the Fed that once this is being dropped, the first increased interest rate increase might be 6 months after that date, in other words 6 months from today, most likely. If this stays in the text, that means that the interest rate hike, if there's any interest rate hike or tightening, will be most likely in the third and fourth quarter of next year. So that basically that will be a dovish sign. Potentially there's also the combination that this text will be sort of differently structured, etc. So there's lots of leeway of interpretation of the economists and the traders of this text issue, but frankly speaking, as long as consistently considerable time stays in the text, the protocol will be viewed as dovish. Dovish, if it's taken out, is hawkish. Hawkish meaning basically dollar up, dovish, dollar down. Then the other issue comes into play is the expectation of the interest rates. Most market participants believe they're going to go down. Treasury markets already have taken this ahead, basically already priced this in, but not the dollar. So in other words, if the interest rate projections are coming down from the last time, because don't forget last time the projections went up, the protocol was not that in September protocol I'm talking about, not last month's protocol but September protocol, that was dovish, whilst October protocol was hawkish. Now it was a dovish protocol, but the interest rate expectation was high, so the dollar basically regained consistently on strength and high expectation that we're going to see very quickly very strong interest rate increases. Now if the Fed takes this back down again and leaves the wording considerable time in the text, that means basically very strong bearish signal for the dollar, which basically leaves here in cable on a weekly chart now the option open that cable is going to resume its uptrend. In other words, that this correction which we have from 148 to 172 was the up move. The correction went up down to below the 61.8 Fibonacci level, and that's where we're standing now on a weekly basis. So this is very critical. If we close this week above this level after the strong week last week already, this basically could mean that the market is inclined to basically go up and test the next resistance level, which come in around 158.65. Let's look at it on the daily chart. We found here sort of a bottoming formation, sideways market, but a bottom around 156 level, and if we break the 158 level, then we have the next resistance coming in basically 158.70, and then we're going to go up to 159.70, 159.05, 159.70 will be the next resistance levels up until we come then to the 50 level on this Fibonacci. So that's the story in cable on the upside. Obviously, if the hawk is going to prevail and the text considerable time is being dropped and the interest rate forecast even not changed, you're going to see a sell-off in cable direction 155, and target would be then basically direction 150. Here we are, let's have a look. 50% retracing comes in at 153.70. So that would be the next bigger target on the cable side. First stop would be 155, where we expect some profit taking on cable. How does the picture look in dollar yen? Dollar yen, again, looking at the daily here, we had the rise 1st of November from 109.35 when the announcement of QE, the extension of the quantitative easing came into play. all the way up to 121.70, 121.80. There we had the correction and hit yesterday the 50% retracement. So it extended the 38.2, and we see very strongly how the buyers took control, and basically this is now very strong support. So the buyers took control and keep control for the time being, but failing at the moment at the 117.50 level, and that's basically also the neckline of a potential head and shoulder formation. We have the shoulder 1, head, and second shoulder, and the neckline basically is here. So closing, daily closing, which we had yesterday below the neckline, signals actually from the technical point of view that we have basically a potential move down based on the height between the neckline, which comes in as say 117.50, and the high point here 128.50. It brings us another 400 pips down, which brings us basically then to 112.50, which brings us up to here, which is exactly the 76.4 Fibonacci retracement level, and it leads to the gap close which we had here since the rally up. Now then it becomes very interesting what the market's going to make out of this. Could enter then, if the dollar weakness overall prevails, then we could enter basically in dollar yen in a prolonged sideways movement, sideways phase, the same as we had here for month on end in last year when we had this move up, the corrective move down, and the market was just moving sideways between 200 pips range for the rest of the trading year. This could be a result. It must not be, but we have to see how this is going to turn out in the next 24 hours. If, however, the protocol turns out to be very hawkish, then the dollar bulls are going to take over, and the market is going to take out the 118 level, most likely 118.10, the 38.2 retracement. And if we have a closing then next week above the 119.50, say on Monday or Tuesday, or maybe on Thursday already, then this means we're going to see a rally going back up all the way to 121. So in other words, from this level we have 400-500 pips potential on the downside based on the protocol, and 400 to 500 pips potential for this trading year still, I believe, on the upside. And we just have to wait for the result. Euro dollar, same kind of picture, where we look now, say on the weekly chart, and make a touch bigger. Oh, here we are, and we see the sell from the 140 in April all the way down to 122.50 that we found support, and we very strongly see here the potential of a reversal. It could be short-term reversal, the same as here, just for 2 weeks basically, but we have here basically a doji forming, so the market doesn't quite know where he wants to go. Indecisiveness basically is this candlestick, and we just simply have to wait. If the protocol basically is dovish, in other words, if the dollar kind of gets under pressure, we obviously have potential to take out this resistance line around 125.80. Make it a touch bigger, just go back, and 125. 80, 70, 80, and then we have immediately the next target 126.40, and overall target would be 61.8 retracement level for this year at least, which comes in around 120, 128 basically on a daily chart. And on the weekly chart we're basically looking at potential at 130, 131 as potential retracement, because before the downtrend basically would resume. That's basically the upside. On the downside, obviously, the picture looks a touch different. Let's turn up to the big picture again and make it a touch smaller, because we really have to go back in time to see where we have the next supports. You can see very strong support here. This is the weekly chart, and once we broken this support line, which is basically coming in at 120 level, 122, this 120 level here, if we break that one, the 120 level, 118 is the next target. So potential is obviously number one on the downside, break of the year low at 122.50 with the next that's around here, and the next target on the downside would be then the 120 level, and then from that 118 level. On the gold side, let's have a look at the gold. If you're looking at the weekly, we clearly see we are overall in a downtrend channel, hanging around in the middle part of it, and we've found very strong support in the area here around 1180, 1192. Once this is broken on the dovish, on the hawkish side, in other words, gold is going to go down, dollar is going to go up, then we're going to head basically very quickly 1175 is the next line in the sand. If this is broken, then we're going to head down direction 1125, 1135 to the year's lows basically, and this could very well happen still this year. On the other side, if the protocol turns around basically on dollar softness, i.e. dovish, then the upside potential has been given direction 1237, and once taken out 1245 to start off with. Whether we're going to climb even higher during the course of the year end, direction 1260 and 1280 then remains to be seen. Basically this is then coming to the upside of the downtrend channel. Only really bullish gold is going to get above that, otherwise than that still remaining in a sideways downways trend channel. So those are the majors, basically what we can expect from the protocol today on potential movements. So what's the market expecting? The market expecting two things. Number one, the market expecting that the Fed is going to reduce their forecasts. The last time we had the forecast in September, they were higher than expected, and that was the beginning of the dollar run, dollar bullish phase basically. Now if they revise, as the treasury market basically expects already, these forecast levels to lower level, which is not priced in the current dollar rate, then the dollar per se would suffer. That's the one point. So we can expect that we can have some pressure on the dollar side coming from this point. But the more important issue is the phase of considerable time, because this implies as long as it stays in there, there's no time horizon in sight when the Fed will actually start to begin their tightening by increasing rates by 0.25% or 20 to 25 basis points. And if this is dropped, however, this wording, that implies that the Fed most likely is going to increase rates within the next 6 months from December. In other words, at the end of the first half of the next year. So that is what the market is looking for. They expect an interest rate rise at the moment in September. If this is put forward, this will be bullish for the dollar. If the wording stays in place, it's definitely bearish for the dollar. Now, and then on top of that, obviously, we have to watch the press conference from Janet Yellen and see what she has to say. Last time it was very interesting that the dollar went one way before the press conference and really turned 180 degrees around during the course of the press conference. So expect high volatility initially on the wording. Then the interest rate forecasts is the next information piece coming along in the market, and thirdly, high volatility again during the course of the press conference. So the market will come down approximately 1 hour after the protocol has been released, which will be at, I think it's Eastern Standard Time, let me just calculate, about 2 p.m. Eastern Standard Time, so 3 p.m. Eastern Standard Time. We should know where the market's going to head, and then we see where the market is going to go, and then we can decide if we want to position ourselves which one way or the other, or just leave the market alone, because the market can't make up its mind as yet. We have two other very important trading days on Thursday and Friday, still in Europe and Asia sessions. And then the market is going to wind down very drastically, and Monday is going to be very, very thin markets ahead on the 24th of December. I wish you a nice afternoon still, and for the pros, we're going to be covering a little bit on the session this evening, and I will speak to you later. Bye bye for now.